Tech stocks seeing sharp declines to start September. The Nasdaq Composite shedding about 5% so far this month, and some of the worst performers are Nvidia and Apple. We're looking at how to navigate the big picture with the Yahoo Finance Playbook. Dan Flax, Neuberger Berman senior research analyst, is joining us now. Dan, it's good to see you. Those two names, among others, are still among your top picks. And, obviously we've had some volatility come into the tech trade. There are different stories with the two of them. Let's start with Apple, since we just had the event yesterday. We had the EU tax ruling this morning. Why are you sticking with that one?
Good to see you. I think what's going on with Apple is that they're demonstrating that they can continue to innovate. We see with iPhone 16, the camera control, Apple Intelligence, the journey around that is beginning. That'll play out over many months. But the user experience is continuing to change. I think the developer community remains healthy. And what we'll see over the coming months is that growth should be a little bit better. You're seeing the installed base continue to increase. China, while a concern, Apple has continued to navigate that pretty well. And so services remains durable, and the wearables opportunity, in my view, remains early. And so I expect better growth over the next year, which will contribute to stock price outperformance, in my view, from current levels.
Let me also get your take on Nvidia, Dan. One concern that I want to get your take on this is this idea that big tech is going to start coming under some pressure from their investors to just kind of slow down this rush of AI spending. What do you make of that concern, Dan? What could it mean for Nvidia?
Brian, Josh, we're sitting at a very interesting juncture here, because you have the cloud vendors, Amazon and Microsoft, Google, investing aggressively because they see revenue growth opportunities in their core businesses and new opportunities around generative AI. And so they're spending aggressively. There is some concern around the capacity, but in my view, they're going to be able to absorb that as we think through the coming quarters and over the next year or two. As far as Nvidia is concerned, there's a little bit of a delay in Blackwell, their new platform, but demand for Hopper remains healthy. And I think the key for Nvidia is to continue to execute on its product cycles. What's happening with artificial intelligence, there's really a whole host of new use cases. If you think about the healthcare world, drug discovery, studies around climate change. In manufacturing, you have digital twins. And so there are a lot of new opportunities for both the cloud companies as well as traditional enterprises to transform themselves over the next couple of years. And Nvidia really sits at the heart of that opportunity. So we continue to like that name, appreciating, of course, that there is some near-term volatility.
Dan, how quickly and at what magnitude are these companies going to have to start to really show more profit directly tied to some of this AI technology?
I think for the traditional cloud vendors, they're seeing revenue like Microsoft Azure in the billions of dollars today. I think that will continue. Now, clearly, they're investing to drive that growth. But if the market sees and the companies are demonstrating that there are large revenue pools to be captured in both the near and perhaps, as importantly, the medium and long term, I think the market will be okay with that. The key for these companies is to drive growth in these newer areas while at the same time demonstrating that in the core, the existing businesses, things are healthy. So if you think about the cloud businesses, you're continuing to see a shift towards the cloud. And when we speak to enterprise customers, many of them are relatively early in their journey. Part of what they're getting is that they're getting access, like with generative AI, to the newest tools and technologies. And so that's why they're going to the cloud, in addition to the ability to turn on the capacity, like flipping a light switch. It's very quick. And that's a contrast with a lot of the traditional IT infrastructure. And so it's a journey, and our focus is on the companies like an Nvidia that can innovate and really empower their customers as we think about the customer's ability to capitalize on all this as we move into next year and beyond.
Dan, also want to get your take on Oracle. Larry Ellison's company reports investors clearly like what they see, Dan. The stock up about 12% right now. What did you make of that print, Dan? And also just your take on the broader business software landscape.
The results were solid. Oracle's demonstrating that they're really able to invest and drive growth in the Oracle Cloud. And when we speak to their customers, they like what Oracle is doing as they extend their ability to deliver value for their workloads in the different clouds. We saw the Amazon Web Services announcement last night. So Oracle customers are liking the fact that you can continue to run workloads on-premise, but also move into the cloud. I think the growth for Oracle Cloud is likely to remain robust over the next few years. It's certainly lumpy quarter to quarter, but the company's investing. Customers are seeing results from migrating to the cloud, and I think it sets the company up well as I look out into next year. So we continue to like that name as well.
All right, you win a lot of investors, Dan. Thank you so much as always. Come on the show. Appreciate it.
Thank you.